Hello everyone. In the autumn of 2011, I issued a note saying that we thought the US was probably the best market to be invested in for equity investors, and also probably the best economy in the world. That was slightly controversial at the time because it was just around September, which is shortly after Standard & Poor's had degraded American debt from AAA, the highest rating, to AA. We said we thought this was unjustified, and we thought the US economy had much better prospects than the rest of Europe and in fact most other major economies. Fortunately, we were proved right on that one, and it's the fact that we've been holding more US dollars in our portfolios and more US equities than other shares that has meant that we've had 3 very, very good years of performance. Well, of course, that's all behind us, and so we have to reanalyse and think, what do we think the best place is going to be going forward for our clients' assets? And as you are probably all aware, we always look at it on the basis of what's the return and measure that against the potential risk. Latest research note that we've issued shows that the US has indeed rebalanced much better than the rest of the world. It doesn't have the chronic deflationary problems of Japan, and it doesn't have the chronic deflationary problems of the euro area. So, despite 3.5 years growth, we're not changing our views on the US, which is fundamentally a strong economy. And if you're worried about its potential to grow, just think of this. If the US economy, the third biggest country in the world, increased its population by just under 8 times, it would still have a lower density per square kilometre than the UK. In other words, the growth potential for the US is enormous.